Good morning, everyone. It's Tuesday, September 20th. It's 8:05 in the morning, and I just want to quickly run through the morning charts, give you an idea of what's taking place through the night and what I'm anticipating throughout the trading session today. If we take a look at the US dollar chart here, you can see we've got this is a 4-hour chart, so we're zoomed out a couple months. And you can see we've had this nice run up, and we started getting that nice pullback, which we had a nice bull flag forming, and then it kind of picked up speed and went into free fall mode. And usually after you get a strong impulse leg to the upside like this, you will get some type of pullback, a counter trend more or less, flag action, and that's what we had here. We had it pull right back down more or less into some previous peaks, which is back here in May, and we had a previous peak here. We had a little bit of a pause as we broke through that level again earlier in September. Anyways, we blew right through that and we started to pull right back down. We saw fear creep into the market, which is why we saw the price drop dramatically. It's everybody kind of bailed out of the dollar position. It did have a nice bull flag forming, a nice tight channel, and then it broke below it and washed everybody out. And that's right where we actually took a long position. And we've had a nice bounce yesterday. We had a great bounce in the US dollar index, and it's starting to broaden on the shorter time frame, which isn't a very strong sign, but we're going to give it the benefit of the doubt. We did pull money off way up here yesterday for a nice little gain and moved our stop to break even in case the dollar ends up falling. We may be adjusting those stops today. We'll see how things play out, but I do anticipate still possibly another push to the previous high, or still another big move to the upside, which may just be starting here. So if I just zoom out on the chart a little bit more, I just want to point out where some similar price action we saw a while back here. You can see it back here. This is back in 2010, and we had a strong downtrend, a little bit of a consolidation. Then we had a really strong impulse leg to the upside, a sharp correction right down to the previous peaks, and then it came up. You can't really see it on this chart because I'm zoomed out a bit, but there's a little bit of a consolidation right in this area, very similar to what we're seeing right now. And then we saw it continue that same move up. Now I pointed this out the other day. When you get a bull flag usually marks a halfway mark. So if you look at this thrust up and then you get a pause, you can usually count whatever this measured move is from the bottom to the top. You can usually count it from the bottom of the flag to the top again. It's usually the halfway mark in the move. So just kind of looking where we stand today, we had the downtrend, we've had the consolidation, we've had a nice impulse leg breaking some previous highs over here, and we have had a pullback into this support zone after a nice impulse leg up. And right now we're just kind of hovering, pausing right here as it's trying to eat through the resistance and more or less move higher. So if we do get another move, we saw pretty basic numbers here. We saw a 1, 2, 3, almost a 4-cent move in total from the low to the high. If we take that to the upside, we're looking at a 1, 2, 3, 4. We're looking at a target around 80 on the US dollar index if we get one more thrust up, which falls perfectly in line with major resistance from back here earlier in late 2010. And of course, if we get that, we're going to have one more downdraft probably in the equities market. We're going to see commodities go under a little bit of pressure, which will play out perfect for our current situation, which is we want a rising dollar. We're looking to short the equities if we do get a setup, and we're currently short crude oil, which crude oil should fall if the US dollar does one more leg up. We should see a pretty good precipitous fall in the crude oil. Anyways, that's how what I see for the dollar. Now let's take a quick look at commodities. This is the crude oil chart. It's a 4 hours, so you can see I'm zooming out about 4 or 5 months. Again, I like the 4-hour chart because you get to see the action, long-term trends looking like the daily chart, but you actually get the intraday action, so you can see pivot highs and lows and things like that. Overall, again, the trend is down for crude oil. We've got this rising wedge slash bear flag, and if we just measure this move to the downside, we can see we had about a 20-point drop in crude oil. I'm not saying we're going to go this low, but there is potential for us to go a 20-point drop, which actually brings us down to about the 70 mark for crude oil, which would pierce the previous low, and we would actually see a pretty sharp drop, which could, if we do get down here, I think it'll put a bottom in crude and we'll probably see it trade sideways or higher from there, but that's kind of where we stand right now. Now just zooming in on the recent price action, you can see we've been riding this support trend line here. Yesterday we came down and pierced it, and once we pierced it and we saw some volume, we ended up taking some partial profits here, about 7.5% gain yesterday. We ended up shorting it the previous day somewhere right up in here, or a couple days earlier. Anyways, we took partial profits on the pierce. We got a little bit of a bounce in the overnight trading, came back down, and it's trying to hold this level, but it really doesn't look all that bullish right now, and this could be the beginning of a much larger fall, and that would coincide with a nice run up in the US dollar index also. So that's kind of where we stand on crude oil and our current position there. Now looking at the gold chart, again this is the 4-hour chart, zooming out several months so we get the grand picture here. More or less it's gone into a toppy top action here, which is, I call it kind of, it's just choppy. You get these new highs with strong selling afterwards, and now more or less it's just trying to consolidate, and it's trying to decide if it's going to end up more or less consolidating sideways somewhere in a channel like this for some time, or continue higher in several months, or if it's going to actually kind of break down and pick up momentum and come down to fill this gap and have this little support zone before it shakes everybody out and runs the stops and then starts to work its way higher. So right now I'm neutral on gold and silver. In my opinion, they're trading more or less in the middle of their range, and I can just show you their current range is more or less from here to here, and gold's been having a nice, it's just been drifting lower and lower, coming down to support, but overall I don't like the price action, and I don't really want to short gold simply because it only takes a couple issues overseas, some headline news, and gold will jump straight back up. So although I'm neutral to bearish on gold and silver, I don't want to short it. I would rather wait for a dip if we do get a really nice dip, and let it start to form a base and look to go long again in the future. Silver chart real quick, very same similar price action as gold, except for it's trading ahead of what I think gold is going to do. It's set in a big high and a low. It's trading in the middle of its range. Really no good price action in here. Overall, on a short-term basis, we've seen gold and silver kind of just fade a little bit lower. They are trading more or less into a support zone. I wouldn't be surprised if we possibly get a little bit of a bounce or so, but overall I don't really like the chart action. I don't see any tradable setups. It could go either way here, and again, I'm just neutral to bearish, but I'm not going to short it. I don't want to be short precious metals. Looking at the SP500, this is the 60-minute chart of the SPY ETF, which pretty much mimics the broad market here. If we just zoom out, you can see we've got a very similar price action to crude oil. The overall trend is down. We're forming this bear flag, and we've come back up into overhead resistance, these previous highs. And I pointed out yesterday in pre-market that we had the big gap down, and I'm looking for a gap fill. Now you can see the gap down yesterday here. More or less the market closed at the high and it opened right there. So we almost came out for a full gap fill to the previous day's closing price. This morning we're going to see the market actually gap higher, and I think we're pretty much right at a gap fill. Let me just change the time frame on here, and I bet you will be able to see that. There we go. So here's the last couple of trading sessions, and this chart pattern actually looks somewhat bearish in my opinion. We'll have to see what happens right after the open and the kind of volume, but what we've seen here, we had this big gap. This is pre and post market trading on the ETF, but we had a big gap down, and you can see yesterday we came up to this high, but in overnight trade or pre-market trading this morning, we're trading right up pretty much at this previous high to fill this entire gap. And the fact that you see this random spike down, sometimes you can actually read off that, anticipate that the market actually may spike down or sell off back down to these lows sometime today, and then from there it could actually go lower. So usually I take these random candle spikes which happen to fall into a support zone, especially when it's come up and filled a gap like this. as a sign that there's a good chance we're probably going to see selling and pressure going to the downside. So anyways, overall the trend was up, and then it started to get choppy, and the fact that we had a big gap down and it's drifted back up here into resistance, I'm going to be really interested to see. I think the market is going to open in an overbought territory, meaning the NYSE is going to have the advanced decline line up over 1,000, possibly over 2,000. I think everybody's going to be buying shares, and the ratio is going to show everybody piling into the market right at resistance. And if it doesn't break through it or just pierces it and starts to sell down, it might be a great opportunity to actually short, because I think it's going to suck traders in and continue to pull back several more points. Pull up the futures prices this morning of the SP500. You can see what's happened this morning. I'll just zoom out to show you yesterday. This is yesterday's price action, the heavy volume on the left hand side. That's regular trading hours, 9:30 to 4 p.m. Eastern time. So we had a little bit of bounce in the mid-afternoon, pulled back. We had a nice surge on strong volume into the close. But right after the close, we saw the market give back all those gains, came right back down to its midday action, formed a base throughout the night. And early this morning, we saw it start to run back up, had a little bit of a breather. It's run back up and is forming another little bit of a bull flag. But overall, we are at a major resistance point. The fact that it stretched up and it's got this big topping candle here is kind of showing me a sign that there's going to be some sellers. It's going to be interesting to see how the market plays out today. I got a feeling we might see lower prices with this big gap up. I think there's going to be an opportunity for people to be shorting. So that's what I'm kind of looking at and looking for today. And that's it for this morning. I'll talk to you guys later. Bye bye.